Hi everyone. Hi, good afternoon. Thank you for being here and thank you for being here every week. I'm so glad to see all of you and a special welcome for those who join us for the first time. You can see Marianne here, who is, I guess, is her first time. Welcome, welcome. We are so glad to have you here and I hope it would be a beneficial session for you. And just before we start, I wanted to have some quick announcements. Uh, I know all of us know Sukesh and Jessica has been interns here, and now they are a full-time employee. So I just wanted to congratulate them once again. I know we've done this in the morning, but you know they were Moracle Foundation interns, and now they are full-time accountant here in Moracle. So just congratulations to both of you. I'm really happy for you, and yeah, it's I can say I'm proud of you. And also, you know what Moracle and Moracle Foundation motto is accounting training, mindset, and AI. You know, we believe that it's the right mindset that can help you do anything that you want to do. And it's not like we just say it, but we are putting it into action. Actually, we are partnering with ATCF, African Transformation Center Foundation, and which are a mindset foundation. And we are designing a program, a mindset program, specifically for Moracle interns and Moracle staff. And also we are having this partnership with them so we can kind of launch our mindset program, which we are so excited about, and it's going to be launched soon, and all of us can receive benefit from it. So I wanted to just give you this good news. And yes, so once again, thank you for being here, and thank you for making it the time every week. And we are on stage 5 reporting. And if you have any questions about each stage, you can just wait for the question and answer at the end of the session and answer your questions. Once again, thank you and hope you have a great session. To you, Marley.
Thank you very much, Sapede. Thank you to all of you guys who here today, but also those who are going to be listening to us, you know, on a replay, you know, on YouTube or all the different channels that we have on Moracle. But it's great, you know, to be here every Thursday. You know, I really appreciate your time. And like Sapede says, I hope that you guys would benefit, you know, from just being here, listening to the conversation. Just for clarification, these programs that we have on Thursdays is just a session, you know, a brief session. Yes, and if you are really interested, you know, in getting the detailed training, yeah, you need to apply, you know, through the Moracle Foundation. Yeah, so that you can come in as an intern. Yes, either 3 months or 6 months. You enroll in the program so you'll be able to do a little bit more detail. Yeah, this Thursday's meeting is for everyone to come in, you know, and have like an opportunity to be reminded about, you know, the Moracle Accountancy Formula. Yes, and some issues that, you know, we want to bring into practice. Yeah, or we experience in practice. So don't take these Thursdays, you know, to say, well, this is what we do in terms of our training. Yeah, okay. If you want the training, detailed training, apply through the Moracle Foundation, and then you'll be interviewed. Yeah, you get involved in the program, where you will do a lot more detailed work, yeah, about the Moracle Accountancy Formula, yeah, okay? Just for clarification, but every Thursday we meet here to talk and remind ourselves, yeah, about the Moracle Accountancy Formula, okay? Why do we do this? Well, the reason why we do it is because this is how we serve our clients. Yes, guys, yeah? Every client, yeah, that we serve when we do our daily work, in the Moracle, yeah, the accountancy practice, it's an audit practice, yes, and we're out there, to serve our clients. Our clients, they come from different backgrounds, different industries, different personalities, yes, different reasons, why, they decide to set up their business. And they have now appointed us, yes, as accountants, as their trusted advisors to be part of that team. Yeah, think about it, guys. Yeah, it's a big responsibility. Yeah, and we at Moracle, we got a formula. The formula we use, yeah, is called the Moracle Accountancy Formula. So let me try and see if I can share my version. Yes, and the thing I like about the Moracle Accountancy Formula, is forever changing. And it's a lot of things have been added. My colleagues, they keep reminding me more like, what about this? Yeah, so it's not static. Yes. So let me see if I can share my formula. But I want to bring this to your attention, and that this formula, yeah, we've designed this formula, yeah, to be able to give us a sense, of order, yeah, and that's the first thing. I like this quote, it says, even in heaven, there is order. Yes. Okay, we've not been there. But you can imagine if order was not there, yes. Yes. And in accountancy, when we're serving a client, we must bring some orderness, yes, or orderly, way of thinking, orderly way of doing things. And this is what this Moracle Accountancy Formula does, yes. In the finance function, paint a picture. Every organization that is out there needs a finance function. Yes, I've had the argument where I say, oh, well, because I'm small, I've just started, I don't need this, I don't need that, okay? We, beg to differ. Every business that is out there, whether it is a startup, whether it's ongoing for a short period of time, or whether it's been there, yeah, big, small, large, whatever you want to call it, yes, there is a finance function, yes? A finance function, yeah, need to be there. And that finance function, we are saying, yes, covers these 6 stages. Stage 1, management information systems. Yes. Stage number 2, management accounts and value added. Stage number 3, the statutory accounts and scheduling. Stage number 4, taxation. Stage number 5, the reporting. Yeah. And stage number 6, filing with the authorities. Every business out there, every organization out there, yes, need the finance office, a finance function. And the finance function, these are the 6 stages that is that you expect to see. Okay. So think about it, So if you are, an accountant, or you decide to become an accountant, then well, hold on. The need for what we do exists. Yeah, I want to remind you guys, and particularly the young people who are coming through, you got all these stories out there to say, oh, well, and accountancy is a boring, subject, a boring area, and accountants are going to be wiped off, soon, because robots are now taking the place of accountants, and all of these things that we hear, I hear them, yes, and there is some case, for those statements, yes, but you know what? I want to focus on the need the need, for what we do as accountants, yes, is there and always be there. Every country, needs, us. Every business out there needs an accountant. And every individual out there, particularly those guys who are wealthy, they need an accountant. So think about it. Yeah. Okay. So if you decide you want to become an accountant, then I'm telling you, it's one of the big decisions, that you've made, and one of those good ones. Yeah. But it's for the long haul, though, not for short term. Yeah, because you need to gather over, a career, a lot of experience. Yes. Okay. But the need for what we do exists. So we've put this formula together to help you, to get, some kind of some orderliness, in your mind when you're thinking about the finance function. Number one, management information systems. What do we mean by that? Yes, it's that stage where you capture the data, you record the data, you analyze that data, you reconcile that data. Okay. And all of these things you do in a certain way. There are procedures, there are ways of doing it, the different, skill set that is required. When you're capturing data, you record the data, you analyze that data, and then you reconcile that data. Yeah. You do it every day, every week, every month. Yeah. That is what stage one is saying to you there, fundamentally. But in addition to that, we're saying for you to be able to do that job in a certain way, then you need to, for example, know the organization inside out, the background information. You need to know, what the organization is there to do, the activities that the organization is actually doing, where is money coming from, where is money going. Yes, the chart of account needs to be, adapted. Yes, you need to be able to have, financial procedure manual, which tells you what it is that we do in the finance function. Yes. If you don't understand that, yes, and get a glimpse, I'm saying, when you say, well, I know it, but I'm saying to you, you got to be emotionally involved in it. Really, when you put your emotions, when you put everything in there, it's what we're saying. Not just half and half, oh, well, I know bits, but not everything. Well, no. We want you to be emotionally involved, to know deep. And that emotional involvement, I'm saying, is, it doesn't come one day. You are never going to arrive. It's going to be an ongoing, process. Yeah, have an open mind to everything. Yeah, you're ready to read, ready to go outside of the organization to see what is going out there, in your competitors' world, what is going outside, in the economic or financial world. That's what he means. Yeah, and bring it back, to apply it to your own present situation. Yes, that's what I mean by emotional involvement. Yeah. So if you don't put these things into place, then, the data capture, the recording, the analysis, and the reconciling is going to be questionable. Yeah, in our view. And I've seen this over and over and over. Yes, I've seen it, and I've been doing this for so long now, and from all different angles. Yeah, being a junior, being a senior, being a manager, being now, somebody now, it's an audit, going to audit other people, designing systems. Now I'm running a show now. Yes, I'm running a business. From a business angle, it's a completely different story. Yeah. So I'm saying here, guys, take this serious. If you are involved in doing stage number one, to be able, to emotionally involve in this, give it everything. Yeah. We don't call things here bookkeeping, because bookkeeping, it's the word that fundamentally, it's there in the accounting dictionary, bookkeeping. We don't want to use that word because that word is anybody could be a bookkeeper now, yes? And the guys, the way they make it now, they make it look so easy. Oh, well, you, bookkeeping is just about just recording those data, and that's it. Well, we say, no, sorry, it's more than that. It's more than that. We want anybody who is doing whatever it is you call a bookkeeping task, to get more, be emotionally involved. The mindset that you bring in that stage, yeah? Because for so many different reasons. I know today we're talking about, stage number 5, but you cannot talk about stage number 5 if you don't understand what is going on in stage number 1. Yeah? Stage number 5 is talking about auditing or independent examination or the accountant report. It says reporting. Now you get an external person, yeah, who is coming in, yeah, to report on what you, the finance person, internally, the finance function has been doing. That's what stage number 5 is doing. You need to prepare, yeah, for the auditor when the auditor comes in. You need to prepare for the independent examiner when they come in to do their independent examination. You need to prepare for the accountant, the external accountant, when they come to do their external reporting. Yes, that's what stage 5 is talking about. Well, where it starts is stage number 1. Yeah, okay. When the auditor or the independent examiner or the accountant, when they come in externally, yeah, they stand in stage number 5. They are saying, what have you been doing? Yeah, all this period. What have you been doing? How have you been capturing data? How have you been recording the data? How have you analyzed that data? And how have you reconciled that data? And that's what they are doing. They're standing there, stage number 5, and they look back. And they look back at number 1. So if you've not been doing things the way it should be done, yes, you're doing it haphazardly, there are no controls, the paperwork is not there, and for example, budget is not there, you don't know where you're going, yes, and even when expenditure, yeah, is being incurred, you're just recording it, yes. Client gives you paperwork, you don't even look at the paperwork. Yes, I got one of my colleague, at work, a client gives him the paperwork, and then he decided, well, no, sorry, the paperwork is not important here, so the paperwork is just for the files. You understand? And he now goes and apply, whatever, it wants to apply. Well, that's not okay. When the client gives you paperwork, it's for you to go and look at the paperwork. An accountant, we are very good at doing that. Yeah, it says you got to apply professional skepticism at all times, not sometimes, all the time. Even when the information is given to you, you're going to question it. Yeah, you're going to ask the question, well, hold on, what is this? What does it mean? Yeah, why are you putting this information here? Because every business is different. Every business. So stage 1 needs to pick that up. Sales invoices. When sales invoices, are issued, yeah, you see what is being there. You want to understand the description. What is in their sales invoice? Yes, for so many different reasons. Accounting is prepared based on a period. Yes, that timing is very important. Yes, you hear the auditor, the accountant talking about cutoff. Yes, because accounting period is from a particular date to a particular date. Yeah, so when you're recording those transactions, if you don't know the period that you are actually, going to be accounting for, then your data capture, recording, analysis, and reconciling is not going to be much, really. Yes. So when you are posting transaction in stage number 1, yes, you're going to read the description. You're going to look out for the dates. Yeah, what period does it say? Because if you are recording any transaction that is outside of this period, yes, that we are going to prepare accounts for, then we know that there is, an issue here. We need to think about repayment. We need to think about accruals. We need to think about deferred income. We need to think about accrued income. Yes? You just post it anyhow. You say, okay, well, I can see the description. The description is saying, yes, from this date to that date. Well, if he says from this date to that date, you're going to ask the question, is it within my own accounting period? If it's outside of the accounting period, then what do I do? You can just post it anyhow. Yeah. So these are the things I'm saying that we need to consider when we are in stage number 1. Yes. So that when you're posting transaction, you are able to pick out those kind of key issues. Yes. Because you're going to make adjustment every month. Yes. Prepayment. Yeah. Accruals, deferred income, accrued income, depreciation. Yes. These are examples of the adjustment that need to be done in stage number 1. So when the auditor comes in stage number 5 and he sees that these things are done every month, then the auditor is going to now have, a very good feeling. Oh, okay, this is what you do here. I can see things are under control. There's some order here. Yeah, you begin to put the auditor's mind to rest. It's still going to apply professional skepticism, though. Yeah, it's going to doubt you, even though it says that this is what you're doing. He's going to want to prove it because he was not there. But you to just tell him that every month when we post a transaction day to day, we're checking for these things. Yes, in line with the financial procedure manual. Yeah, and after we've done the recording, we do an analysis and then we do the reconciliation and somebody reviews that work. And then if we see that in the posting, we see that it's a prepayment element there, then we make the adjustment at the end of the month. Yes, and all of that, yeah, is reconciled and is approved. The banks are reconciled, yeah, and the bank reconciliation, yeah, a report is now pulled, and saved somewhere. Somebody else who is not involved in the bank reconciliation process reviews that and sign off to it. The auditor is going to be in a good feeling. Yes, stage number 5, when it comes, is going to say, oh, what, that is really good. But the auditor is the auditor. Even though he's saying that is good, it's still gonna doubt you, because that's what is required of him. Professional skepticism is gonna doubt. Yes, he wants to prove what you're saying to him. Well, if you are somebody who has not documented what you've done, and we are very good at doing that, to keep things in our head. Yes, we're very good at doing that when we're doing stage 1. So I'm asking you guys, yeah, and I'm appealing to you, if you are involved in stage number 1, please, yeah, document, yeah, evidence. Yeah, you need that, because when the auditor comes, yeah, it's not going to just rely on what you said to him. He wants to see the evidence, and that evidence needs to be documented properly. So these are all the things that we need to consider in stage number 1. Yeah, that's why we call it management information system. What that means for us is all the different systems are all coming together, yeah, in an integrated way, making things seamless, when the postings have been done. Yes, in stage number 1, the banks are connected to the accounting system. Yeah, the supplier invoices, there is a system that you have that, extract all the relevant information from the invoice that is sent to you digitally, yeah, into the accounting system. And that invoice is attached, to the system within the accounting system, so that, if not somebody wants to review that, they can see the invoice attached there. It's no manual stuff. Well, here is all paperless environment, we're saying. Yeah, the payroll. Yeah, the payroll system is connected to the accounting system. So when the payroll is done every month, yeah, it's been approved, it's been filed with HMRC, there's a journal that comes in from the payroll, yeah, into the accounting system. So when you're making the payment to the individuals, you're making the payment to HMRC, you're making the payment to the pension company, yeah, you are able to post it to the control account, and then you can reconcile every month. Have we paid more or less every month? Have we paid more or less to the individuals? Have we paid more or less to HMRC? Have we paid more or less, to the pension company? Every month, yeah, you got to reconcile it. So I'm talking to my colleagues, the other day, he was talking to me about payroll. He said, oh, I've done payroll, so I'm trying to reconcile. And I said, well, okay, well, can you show me, what you're doing to reconcile? And it's interesting, and he was not able to show me. but he's trying to reconcile it in his head, or reconcile it. Well, you are stage one. Yes, I'm talking about evidence that you need to have. I know you've done it, but where's the evidence that you've done it? Yes. Well, I'm asking, guys, I'm advising you guys, and I'm recommending, please, if you're doing this stuff, the paperwork, the supporting evidence of what you've done, it's so good for you to be able to have it somewhere. Every month, whatever it is that you're doing. If you don't bank reconciliation, guys, take out the bank reconciliation report. Yes, give it to somebody else who is not involved in it to say, check it for me, and then sign off. If you've done the payroll, you understand? You want to make sure the payroll is posted and then the reconciliation, is done every month. You're checking the net pay control account. You're checking the PAYE control account. You're checking the pension control account. It's got to be done, not just to do the payroll and posting. That reconciliation has to be done, and then print out that reconciliation and give it to somebody else for them to review and then check it and sign off. Yes, guys? Debtors. If you are posting based on the sales invoices are raised every day, every week, every month. And then when the money is received from the customers, it goes through the bank. The bank is connected to the accounting system, and the posting is being done every day, every week, every month. At the end of the month, you need to be able to produce, a sales, what you call now the debtors control account, age debtors control account. Yes, you check it, reconcile it, making sure that you understand if something is there in the debtors control account, you know why it's there. Yes, and the reason why it's there. Yes, okay. Every month you've done that, give it to somebody else for somebody to review it. The purchase ledger, supplier invoices. Every day, every week, every month, supplier invoices are received and you are posting it into the QuickBooks or Xero or the accounting system. Yes, when the payment is made to the suppliers, you are applying those payments, against those supplier invoices. At the end of the month, you need to produce and reconcile supplier outstanding balances, age creditors, age payables. Produce that report, check it. If something is there unpaid, you need to know the reason why it's there. Every month you're doing it. And now I'm asking you, when you do that, pull that report and give it to somebody else. Yes, one of your colleagues, or somebody who's senior, who's not involved in that process to review it. Yes, these are some of the fundamental things that we need to do in stage number one. Yes, and if you did that in stage number one, every month, those reconcile, balances are there, and just imagine you do it 12 times. Yes, you produce those reports 12 times, yes, in the year under review. Those figures, you will understand, you will know those figures inside out. And now, just imagine, with that confidence, knowing those figures, and you're talking to the auditors in stage number 5, all the time you'll be smiling. You want to meet them, you understand? You are not going to give, any reason why this has not been done. You are not going to be, in a situation where you don't feel good about yourself. Yes, you are not. You are going to be in a very, very strong position. Are you with me, guys? That is what stage one is doing. And it's so, so important that you guys, we know about it. And do it. Yes. And I'm asking here, this is not just for one-off. It's got to be consistently done. Yes, consistently. We talk about this consistency principle. Yes, it's one of those accounting, what you call it now, principles, that we need to apply all the time. If you do something, do it consistently. Consistency principle. You do it consistently. But I'm asking here, guys, yes, that when you are in stage number one, consistency, bigger brother, yes, I call it, or cousin, is the adaptability. You got to be adaptable. Yes. And what I mean by that, every client is different. So you can have, the knowledge, that fundamental knowledge, but you're going to adapt it, so that every client, knowing they are slightly different. Yes, okay. You got charities. Yeah, even within charities, you got incorporated charity and unincorporated charities. They're slightly different. Even within a charity that is incorporated, you got different, purposes. Yes. And also within the same purpose, they could have different types of activities. Yeah, where the income is coming from and where the money is going. So you need to be able to adapt. That's your knowledge base. That's your intellectual, property. That's your skill set that you have. Yeah, to be adaptable, consistently applied. Yes. Okay. These are all those fundamental principles that stage number one, we need to apply. So if you are involved in stage number one, yes, it's so important that you are, a boss in your own right. Yeah, don't allow anybody to say you're a bookkeeper, because when you say bookkeeper, I say, oh, well, maybe you don't know much. Well, no, sorry. Yeah, tell them that you are involved in the management information systems, you are in that function. Yeah, because, there's so much that is expected of you guys. There's so much. And I want you to know that. Why? Because there's so many, stakeholders. The auditor is number one, stage number 5. The auditor, when it comes in, it wants to see that there is a system that is in place, that has been, not only because they come in, then you are doing it. No, sorry, it's because this is how we do things in the finance function. We do it every day, every week, every month. Yes. And then for the year, we know the figures inside out. Yes. And that leads me to the next stage, stage number 2. Yes. And I like this statement where it talks about anything that is measured. If it's something is measurable, then you know what? It can be improved. Yes. And that is, I don't know, Peter Drucker is the guy, yes, who said that. Yes. If something is measurable, yes, then you can get to improve. So number 2, what he's saying here is, we are now going to measure what basically we have been doing is number 1. Number 1, we set up a budget that this is where we want to go. Yeah, we have that budget in the accounting system. And then as money is coming in, as we're spending, we're recording it and checking it against the budget and asking questions. So there's a control aspect with stage number 1. Number 2, what he's doing, you're now going to produce management accounts. And we say here, it says, and value added. It's not just management account or figures that you just produce. Well, no, sorry, you're going to pull something, yes, that is adding value. Yes. And I'm talking here about, measuring. Yes. Number 2, think about it. You are measuring, what you said you were going to do in stage 1, yes, against what you actually did. And now you're now reporting and say, we said we were going to do this, and this is what we actually managed to do. Yes, good or bad or indifferent. Yeah, we now say, why is the reason? Why? Well, you don't want to wait until, after the event for you to know the reason why. Yes, as you are doing the posting, yes, in stage number 1, yes, you are going to be able to know what is going on. Because when it comes to spending, yes, when you record an expenditure, you see the invoice, you are going to check it against the budget and say, oh, hold on. Yes, we budgeted to spend, £5,000. Now I'm getting an invoice for £7,000. Well, you are not just going to approve that. You're going to check it and say, hold on, why 7,000? Yes, the budget says 5,000. So you can see the reason why we need to have the budget, and the budget needs to be in the accounting system. And then before the payment is approved, we are involved in it, to ask that question. Why 7,000 when it should be 5,000? But also it could be an amount that is less. Why? If it's 5,000 is the budget and then they are spending 3,000, you're going to ask the question, why 3,000? Because in the budget it says 5,000. Why are you asking that question? Because when it comes to reporting, stage number 2, yes, you are going to, yes, say, yes, we overspend or we underspend. And this is the reason why. So if you are not able to track things down in stage number one, you can see how number two is going to mean so much. Yes? So much work. And you're going to be guessing. So number one, yes, heavily, yes, we're relying on number one. Stage two, yeah, for you to do stage two, yes, number one needs to be done, so well. So it's not only stage five, when the auditor comes in, yes, to be able to say, oh, well, what is happening in stage one? Even the guys in stage two, they are saying, yes, I want stage one to be done and done properly. If stage one is not done properly, stage two, we're not going to be able to do stage two properly. And we have that situation here, and I'm saying this, yes, we have that situation with us right now where, we're trying to produce stage two reports and we're struggling. And that's the fact. And the reason why we're struggling is because stage one is not okay. Yeah. So now we put and a team together to say, you know what, we're going to tackle this. So we've got more people joining us for stage number one. Yeah, with the clients that we're working on. So now we're going to put focus on stage number one. So if we get stage one, up and running, you see how stage two is going to be so simple and straightforward. Yeah, guys. So stage two, management accounts and value added is so important a stage. And guess what? When the auditor comes in stage number five, yes, it's still looking at what is going on in stage number two. I was talking to my colleague the other day, and I said, the reason why we have, in the agenda, the planning meeting agenda, why do we ask for management accounts? It's for this reason. And we're asking, yes, we want to know whether there is a process in place where every, so often, whether monthly or bi-monthly or quarterly, yes, management accounts are produced, and this management account are discussed at a strategic level, and then minutes are taken. They are recorded, to say, well, this is what we're going to do. Yes, strategic decisions are taken, and then they have to be minuted. When the auditor comes in stage number five, is looking for that as well, because that's part of the controls that should be in place to improve this organization. Yes. So it's not just only, oh, well, just preparing management account, and then that's it. No action is taken. No, it's got to be actioned. Whatever discussion takes place, it's got to be actioned and it's got to be recorded. When the auditor comes, it wants to see those minutes, the copy of those minutes. It wants to read to see, what was discussed, what was agreed, what was implemented, the strategy. Yes, guys? So if you are involved in stage number two, yes, remember this. Yes, you are thinking, if you're in an audit environment, when the auditor comes in, it wants to see that. Because stage one and stage number two, think about it, together, yes, well, here we call this the transformation. Yes, it's a transformation, I'm telling you, and a digital transformation process, we call it here in Moracle. Why? Because, everything here is done digitally, is done paperless environment, and then the software that we're using, the connectivity that exists, it makes it so much easier to do. So you can see digital transformation in place. And I'm telling you, when this works, yes, for every business that is out there, yes, number one and number two, yes, if that is done consistently, yes, that business is going to grow. That business is going to do very well. Yes, we know. However, good that business is, when there are financial turmoils out there, it affects the businesses or business in question. But you know what? That business will be able to weather the storm. However difficult that storm is, however rough that storm is. If stage one and stage two, yes, we focus on it, yes, and it's been done every day, every week, every month. That is stage number one. And stage number two, you focus on that every month, yes. I'm telling you, they can weather every storm that that organization faces, whether it be financial or otherwise. Yeah. So stage one and stage two, So important. And for the auditor, yeah, it's so crucial. Yeah, because when it comes in, it was not there when stage 1 and stage 2, yes, activities were being done. Stage 1, what happens? Every day, every week, every month. The auditor was not there. Stage 2 is done once every month. The auditor was not there. So it's coming after the event. So it wants to see that there is evidence that this has been done. It's not just telling the auditor, oh, well, we do management account. Oh, no, this is what we do. It's going to say, well, hold on, can you show me, please? When this management account, where they discuss at a meeting, at a strategic board meeting, and what are the actions, yes, they were taken, yes, and if the actions were taken, did we follow you up? What are, the after the action? What are the results? What are the challenges? It wants to see that because it helps him to get confidence in the system that is in place. Yeah, it is into audit. So guys, I want you guys, if you are involved in stage 1 and stage 2, think about it. Yes, the accountant, even when the accountant comes, the external accountant, it wants to see that stage 1 and stage 2, yeah, it's been done and on top of it. The independent examiner, it's the same thing. When the independent examiner comes in, it wants to check to make sure the accounting system that is in place, stage 1 and stage 2, yes, they are good enough to be able to support the financial statement that's been prepared. Yes? When the auditor comes in, it wants to understand the system that was in place. Yes? To now support the financial statement, yeah, that is now going to audit. So it wants to check the system. So the auditor, in his, thinking, if the system is good and he's tested that, and how does he test the system? Well, it's got this testing called compliance testing, yes, or walkthrough testing, or system testing. That's what he's doing when he comes there in stage number 5. Yeah, he's testing the system that exists. Why is he doing that? Yeah, because he wants to now see, well, hold on, this system that existed, yes, that is used to produce the financial statement in stage number 3, is it good, bad, or ugly? That's what he's trying to do there. It wants to know the system that existed, stage 1 and stage 2, particularly stage 1, yes, what is happening there? It was not there when things were done daily, weekly, monthly. Yeah. So he wants to know. He wants to check it. Yeah. And then he carries out walkthrough tests or compliance tests or system tests. Yeah. To check to see whatever it is that you said you have done is actually what is happening. And that is a really interesting testing for auditors. Yes. Okay. If you want to get involved in doing some of those tests, guys, we're not going to be able to do it here in this training, but you come down to the training program. Yes. If you register, through the internship, you will get to see, how compliance testing or walkthrough test or system testing is being done. Yes. And it's really interesting. Yeah. Okay. So put your name forward, yes, to the audit team and say, I want to see how compliance test is done. Yes, I want to see how walkthrough test is done or system testing. Basically, what is focusing on stage number 1. Yeah, you want to. So stage number 3 is the statutory account, yeah, and scheduling. After you've done stage 1 and stage 2, consistently apply, adapt, to the situation that you find yourself. All of these things are done every month, for the rest, of that 12 months that you are reporting. Now, the statutory account needs to be produced. It says statutory. Well, it's by law. Yeah, so I'm talking to my colleagues, and it says, and some of the colleagues, they're testing me. And they'll come into, they'll give me a cup of tea or chocolate, whatever it is, and then they'll say to me more like, I just want to pick your brain, on this. Well, I like you to pick my brain, and for me, brain, I don't keep anything in my brain there. I want to share whatever is there. But I want you to come from an informed position. Yeah, from a position where you have read, you know what the principle says, or what the guideline says. You understand? And then now we're talking about this. Yes, but not to just come to me and say, oh well, I don't know, I want you to tell me what to do. I'm not going to do it. Yeah, because it's just a one-way direction. I don't like to be just one way. I like, when you come in and say, you know what, this is the situation I've got in front of me. This is what I thought about this, because this is what the guidance says. More like, what do you think? Oh my goodness. Then now, yes, we're gonna have that informed discussion. Yes. So you hear most of the time I'll say to my colleagues, no, sorry. Yeah. Have you read what the guidance says? So what is your thought? I'd like to know what your thoughts are, yeah, on this particular issue. What is it? And when you tell me what you think your thoughts are, I want to ask you, well, hold on, where's your authority? Where's your authority? Because you cannot just be saying things for just saying it. Where's your authority? And the authority, I want to know, is it the Companies Act? Is it the Charities Act? Is it the FRS 102? Or whatever authority that you are referring to, for you to be able to have that thought, yes, or that thinking, or that decision that you have made. What is it that is guiding it? And this is what makes accounting beautiful, yes. And this is why, when the auditor comes in, is talking to the person who has prepared the account, yeah, he wants to know that that person is knowledgeable. That person who has prepared the account, yeah, understand why it is called statutory account, because it's applied the accounting standards. It's applied, all of those principles. Yes, the income statement, the statement of financial position, the notes to the account, all of this in line with the accounting standards. Yes, it wants to make sure that that person who's done it, yeah, understand that. So it will be asking some question. But if you are a person who has prepared the statutory account and you don't know the accounting standards, yes, you don't read it, you don't know the Companies Act, you don't read it, you don't know the Charities Act, you don't read it, you understand? And then you say you prepare account. Think about it. The auditor in stage number 5, what do you think he's going to think? Yes, is he going to rely on it? Yes, think about it, guys. Is he going to rely, on something that's been produced by somebody who does not know or don't demonstrate they know? No. Yeah, it's gonna doubt you in the first instance. It's always gonna doubt you. The auditor in stage number 5. That's what we're allowed to do. We got license, to doubt people. Yes. So when they give you the audit license, or you're involved in doing auditing, that's what they're giving to you. They're giving you a license to doubt people, yeah, and question people and say, well, hold on, show me your authority. Yeah, why are you doing things like this? We got license to do that. So think about it. Somebody who's got license to question you, and then you are not prepared. Just think about it. Yeah, you're giving double license, isn't it? Yes, you got a professional license to question you. Now you are giving him another license to question you. Yes. So you are not going to be in a good position with the auditor. Yes. But if you come from a place where you have read this stuff, yes, and you are talking to him, the reason why this income is restricted, unrestricted, is because the SOP says this, yeah, or the charity guidelines, or the charity commission guidelines says that, yes, then the auditor is going to listen to you. Yes, you're going to have, an informed conversation here. But also, it's about your credibility. It's also about your professionalism. It's also about who you are. Yes. But if you don't, yeah, think about it, guys. You're gonna struggle. The auditor is, it's number one, is doubting you, and number two, you give him reason to doubt you more. So that situation is not gonna be. It's not gonna be okay. Yeah, to say the least. Yeah, you don't want to be in that position, guys. Yeah, so take it seriously, guys. Whatever it is that you're doing in stage number 3, those schedules need to be there, to be able, to explain, clearly income. Why is it income? Restricted funds or unrestricted funds for charity. Why? Yes. in an account, what you call it, for companies that are limited for shares, yeah, you got to know the turnover. That turnover is it reconciled to the VAT returns if it's registered for VAT? Yes, that turnover, are you able to break that turnover down into different activities? Yes, your cost of sales, yeah, should be different from your overheads. Do you understand why it should be? Yes, you should be able to now match the matching concept. The income that is there for a particular activity, you want to match it against the cost of sales. Yes, so the cost of sales is the cost of generating that sale. That's what it says, cost of sales. So you need to be able to understand, yeah, that relationship. There's a direct correlation that exists. Yeah, do you know that? Well, you don't want to wait the auditor to come and tell you that. You should be able to demonstrate that when you're preparing those accounts. And if, say for example, yeah, your gross profit margin, yeah, is now different from what the industry, standard is, well, you need to give a reason why. Yeah, you need to know that, so that the auditor is going to question it. So you prepare for these things. So these are some of the things I'm pointing out, that we need to do. So stage 1, 2, and 3, think about it. The auditor is so interested in those areas. And if you are involved in stage 1, yes, remember, there are lots of stakeholders that rely on you doing things in a certain way. Yeah. Emotional involvement to understand what the charity or the company or the organization is about. It's so important, guys. The connectivity. If you are working in stage number 1 and then the bank is not connected and you're working there, guys, think about it. Yes. If you are working in stage number 1 and then you see, for example, yes, things that are supposed to be there, fixed asset register, and income register or grants register, all those registers are not there. Yes. Think about it, guys. Are you doing your job? Yes. And I was talking to a colleague, who is working at stage number 1 with a client, who is selling, a dealership, of cars, second-hand cars. Yeah, they're buying cars and selling cars, and checking now the register that exists, the stock for those cars every day, every week. You're not doing that? Well, no, sorry. And you are doing stage number 1? Sorry. You got to, yes, you got to, to have that schedule. Those cars, buying and selling of those cars, yeah, it's got to be recorded, up to date, and you need to check it. Those are the kind of things that we want to do in stage number 1. Are you with me, guys? Yes. If it's an asset, a company that is got asset like properties or stuff like that, you want to have, an asset register, whereby those assets are tracked, every day, every week, every month. How is it for you? Don't sit there and say, well, I'm not too sure what to do. Yeah, if you're not sure, come and ask, guys. But we want you to get involved. Emotional involvement. Yeah, that's what this means here. But the auditor, is so, yeah, it wants to see that there's adequate system that is in place. Yeah, stage number 1. Yeah, and a system, that exists that helps to measure things. Remember this: if anything is measured, what get measured is a get, improved. Yeah, don't forget that. That is number 2. Stage number 2. Yeah, so we have to measure, what is it that we set out to do. Yeah, so that we can improve it. Yeah, and if you do that every month, yeah, you're gonna get, a system that is approved. Yeah, and number 3, the statutory account, when that is prepared from stage number 1, yes, those accounts are gonna be fit for purpose. And if the auditor comes in and sees stage 1 and stage 2 is working properly, stage 3, the accounts are prepared, based on the accounting standards, the FRSs, or whatever, authorities there, you're going to give him more confidence. Yeah. Very important subject. It looks complicated, but seriously, guys, If you stand there, stage number 5, just look back. Stage number 1, yes, the controls, the systems, and stage number 3, the accounts and the balances. Yes, that's what the auditor is keen. Yes, when he comes in, that's what he's focusing. Yeah, number 1, the systems. Number 3, the numbers. Yeah, and if you take care of that, auditing, yeah, makes it look simple. Yeah, so maybe we should be talking about auditing made simple. Yes, and when it's time number 5. But we got a team, and really we're gonna make auditing, simple. Seriously, yeah, because we're going to talk about this, in a way that makes auditing simple. Yeah, it cannot be difficult. It cannot be. Yeah, in fact, for all the stages, 6 stages, we're gonna make it simple. Stage 1 is gonna be simple. Yeah, if you involve in stage 1, it's gonna be simple. Yeah, stage 2 is gonna be simple. Stage 3 is gonna be simple. Stage 4, simple. Stage 5, simple. Stage 6, simple. Now, we got and our team members now who are now working on filing things now, in the digital way. So you get accounts now, where, once you finish the account, you just through, our digital, you just send it directly to the client for approval. Yes, digitally. So the client goes and put the electronic signature, they approve and sign, and we get it back. And then we file through digital just by pressing a button. Okay. So all of these things, yeah, it makes life much easier. We're making it simple. And that's why I'm asking you guys. Yeah, please, really, if this is what you want to do, yes, to serve, businesses, to serve organizations through what God has blessed you, this financial skill set, master these 6 stages. Master it. Yes. But I'm telling you, yeah, because every finance function has got all these 6 stages. Well, if it's more income that you want, yes. Well, if you master this, you're going to get more income. If it's more knowledge you want, this 6 stages is going to give you more knowledge. If somebody who wants, I want to be, a professor, in whatever it is that you want to master this. Seriously, guys. Yeah. Okay. The law of compensation. I love that law. Yeah. Okay. So I will stop here for now and take 1 or 2 questions. Yeah. Thank you. Thank you again for listening. And then I hope that this will help you guys, go and put it into practice, guys. Yeah. So important that it's not only just listening, but to go and put it into practice. And if you got problem, yeah, you got challenges, then just come back. Let's discuss this. Yeah. Thank you. Any questions? Or any observations? Auditing, yes, auditing. This is the last session, for our discussion. Yes, sorry, I can see a hand up, Calvin. Thank you.
Yes. Yeah, this is Calvin. Good afternoon. Thank you, Malai, for that interesting, the interesting session. So, mine is not, might not be a question, but a contribution and also maybe an observation. There's this interesting part that you talked about the management accounts that that needs to be discussed in a strategic meeting, needs to be minuted and also recorded because as an auditor, when you appear there, you need to check whether it was discussed, it was agreed upon before maybe something was expended. So something there a little bit. It comes to a company, we have these companies that are being run by one director, so that it's a one-man show. Even the decisions that are being made, you find like when you appear there, it's just something that the director alone decided to do. It's not backed up by any supporting document like minutes, and it's done, and you're there as the external accountant or the auditor. I would like to hear your comments about such a situation. Thank you, Malai.
Thank you. Very good question. And you've got a lot of businesses like that, and that's what makes, entrepreneurship, what it is. And you hear those statements that it's lonely up there, yes, when you're running, this kind of businesses, because you are the sole director, the sole shareholder, yes. But think about this is where we come in, even from the auditing point of view, yes. It's a big issue, to go into an organization which is fall under audit, because statutory audit, yes, is all about, the professionalism, objectivity, just conflict of interest kind of stuff, that you go in there and making sure that, systems are in place adequate for the purpose of that business, yes, and is that business profitable, yeah. But when it comes to, for example, the conflict of interest, where this is the first thing that jumps out at you, yes, and you got this one person who is the shareholder and is the director, yes, and when I say director, yeah, I want to qualify this. It's not director just in the case because it's company's house. It's the director that is actually functional, yes. So I want you to paint that picture. Yeah, so the shareholders, yeah, is one person. The director in company's house, yeah, is the same person. And then the functional, let's say CEO, yeah, it's the same person. Okay, think about it. What does auditing says? Auditing says, yes, and you are going to be employed, yes, by who? The shareholders, yes. So the shareholders, they appoint the auditors. Yes, and then you are going to be reporting to the shareholder, yeah, not to the director. Yes, because the directors, the CEO, and the team are the people who are going to be involved in the operation. So, in my own interpretation, yes, my layman terms, you are saying you are employed by the shareholder, yes, and then you are now going to now report on the operations of the operations, yeah, which include the CEO. Okay, so if the CEO is the same person as the person who appointed you, so you are going to be reporting, yeah, to that person, the shareholder, about, what he's done. Yeah, okay. Well, reporting to the person about what you done, that's not what auditing is saying. Auditing is saying you report to different people. Yeah, you report to the person, yeah, like the shareholder, the group of shareholders. So you are in that situation. The auditor now needs to now say, well, hold on. Here's a risk here. So what we need to do is to now advise. You come now with the advisory role. Your capacity build this team, so that they understand this, because they might not understand it. Yeah, and that's the truth. You don't expect entrepreneurs to understand the auditing guidelines or the accounting guidelines. No, it's not their job, guys. They are business people. Their mindset is different. You understand? They just want to be there, run the business, make profits, do what they want to do with that profit. That's all they're there, serve people. Now, you are coming in as an auditor. Well, you need to now be aware of that. And that's why it's so important, guys. You see, and this happens in so many different countries, not only Africa, so many different countries. Even here, we have it. So what do you do? What do you do? Yeah, so you change your hat now into the advisory hat now and say, you know what? Well, we need to put, some segregation of the functions. Yeah, you can help to now capacity build, the board, so that you can get people who are external, to the board, that can sit, and be part of that board. You understand? So that, when you are reporting or when you have been appointed, there's a board that appoints you. Yes. And then when you are going to do your audit, you're now going to take that as in consideration. But you are wanting to make sure you put systems in place or recommend systems in place that is going to now give you that segregation. Yes. And if you don't do that, then you're not a good auditor. Seriously. Auditor is not just to come in down, and then drop the hammer, on people and say you're doing it wrong. It's about advising them. Yes. And say, you're going to put this system in place, and then sometimes, to really raise the awareness. But what you are looking to do basically is to make sure those two functions, yes, are different. Yeah, the shareholders who appoint you, that's what you're going to be reporting to them. Yeah, it's got to be different from the operations. Yes, because when you come to audit, you are actually dealing with the operations. Yeah, the systems, the stage number one. Who is doing it? Is the shareholders? No, it's the operations. Yes, it's the people who are charged with the operations. They're the ones responsible. So when you come, you're talking to them, you're talking to the people who are charged with our operations, not the shareholders. Yes, but the shareholders are the one that you signed that engagement letter, with. Yes, so you're going to be reporting to them, and what you're doing, you're reporting to the shareholders about the management. You understand? Even though, yes, in practice, it's the management actually who is going to be appointing us. Yes, because they're going to look as they like us, or they don't like us. And when the management does not like you, well, you are in a big trouble. Yeah, practically. Yes, and we need to understand that. Understand? But the function for us now, we got responsibility to make sure those two groups are different. Even though it's one person that is there, top of the whatever it is, and then bottom there in the management. So now, if that management, same person, is acting as management, and that same person is now part of the board, then now you want to see, hold on, in the operations, are there other people that are supporting him? And there must be. It cannot be just one person, doing everything. Yeah. So what you would then need to do now is when you're planning, to carry out your audit test, you know that the risk is there. Yeah. And that is a risk of override. Yes. Well, the shareholder, yes, makes key decisions, and then when it comes to implementing it, so you can see how the override is going to be easy. Yes. So that is a big risk. So now you're looking for something outside, when you're testing, to see something outside to help you, to close that gap, because that's a gap. Yes, management override. Yeah, because the guy who is the shareholder there is the same person in operations. So he's going to override, some of those controls. Yeah, because, well, it's nature. Think about it. It's nature over nurture. You got the rules to say, well, this is what you want to do. But you know what? Yes, you don't want to follow those rules all the time when, it's not convenient for you. So you're going to break it. And that is the management override that we're talking about here. So it's a big risk, in small organizations like that, or a owner managed business like that when it comes to audit. But you now need to now look outside of that. Yes. Is there any other complementary system? Is there anything else that you can fall on, to help you, to get information that will help you with your objectivity? Yes. And you need the auditor to be really skilled. But again, I'm saying here, whatever it is that we do, we need to be able to capacity build, yes, organizations like that. That's why you find that you find auditor, even ourselves, we got a challenge, because you find that the audit fee, that we charge for the work that we do for auditing will be X amount, but there's other services that we do. Yes. And those other services, could include that. To make sure that we put, an effective management system in place, or recommending or advise or whatever it is. So you find that the auditor, is getting auditing fees, but it's getting some other fees as well, where you got other services. And we're allowed to do it, even though in the eyes of the public, he says, well, hold on, how can the auditor, be advising, and then doing the audit? Yes. But, auditors need to be, what you call have the Chinese wall. So the people who are doing the audit need to be different from the people who are providing the advice, even though they might come from the same what you call it now, office or so. Yeah. But they have to be different. And there are controls that need to be in place to be able to allow that to happen. So that is a very, very, topical issue, in terms of audit. Yeah. And management override, in small businesses like this, but you got so many small businesses out there who are going through this. Yes. And the audit profession is really, really strong about this. Yes. And it's getting better, I must say. It's getting better. Yeah, that's why you find that you got advisory boards now. Yes, I mean different advisory boards, and that's what you provide. Yes, so when you're in the advisory board, you are now advising the shareholder, about these issues. Yes, no, sorry, if you are in an audit environment, then you cannot be the same shareholder and be the same, CEO. Yeah, if that's the case, then let's put systems in place. That's a good advisory board that you have advising you about matters like this. Yeah. So yes, there is that kind of consideration there, but it is doable. But it's one of those difficult things, to do audit. Yeah. But it's a very, very good question. Very good question. Yes. Well, we've got an audit client actually that falls in that category. Yes. So we'll be watching to see where it's a new client for us. Yes. So we watch to see what involvement of that CEO, the shareholder being the CEO. Yes. And what is the involvement? Management override, that big, override that we can see clearly in our eyes. What are we going to be doing? You understand? But we want to understand it first of all. So we want to now make sure we got really good background information about this issue. That management override, yes, big risk for the auditor. Yeah, when you have situations like that. Yeah, but interesting. Yeah, interesting topic. Thank you very much. One more question or observation, then we can finish for the day. Interesting audit. Why are the auditors in the house? Let me look at the auditors. Where are they? You cannot say you don't have questions, my friend. Or share some experience. Other people here want to hear. Auditors. Let me see. Robert, yeah, another auditor. I'm sorry, I'm calling your name, but I need to spotlight you. We cannot be talking about auditing. You don't have any question or comment here. Robert, James, you are involved in audit as well. Yeah, preparing for auditor. So come on, guys, share with us. Yes.
Yeah, I think you just mentioned it about the current situation we have, where we have a shareholder who is the CEO at the same time, and is a single director. So it's a new client. It's an interesting one. So that's a wonderful question from Kelvin. Yeah, we'll update you how we get on, Kelvin.
Yes. But the guidelines there for that, yeah, it's not like you're gonna come from the rocket or from moon, you understand, to get sorry, the guidelines for these things. And these things are common, So now go to what the auditing standard says, about this kind of potential conflict of interest. Yes. Conflict of interest is everywhere. Yes. But that's not the issue. The issue there is, what protocols, what systems, what procedures you got in place to identify those conflicts of interest, and then what are the safeguards that you put in place, to make sure those conflicts of interest, you lessen their effect. Yeah? What safeguards have we got in place to make sure that potential, management override, is now negligible? That's what it is. Yeah, you got me? And it's not more like saying that. There's guidelines. The auditing standards, says that clearly. Well, do we know that? Okay, there you go. Yeah, okay. We got an audit program, that it helps us, with these things. So that auditing program, let's go down there and see what he's suggesting. Yeah, but we've got to be informed, yes? Yeah, we've got to be informed. And take those issues. Yes, Professor James.
Yes, sir.
You are preparing for audit, yes?
Yeah. Okay. Sorry, just bear with me with my camera.
We're hearing you. That's all right. We're hearing
Can you hear
you.
me?
Yeah.
Can you hear me? Yeah. No, it's my camera. Oh, yeah. Yes, actually, in terms of this override or conflict of interest, normally I think when you talk about when you want people to declare, they think you are now making them feel guilty. Yeah, in the middle of that, because there is a shade where you have got to say whether the people, the managing this or people involved in this at an executive level have got an interest. Then the question which came back was like, which interests are you talking about? Can you clarify? So I think, to be able to be pay sensitive to that, because usually questions, as human beings, we don't want to be questioned. And then when you are questioning things, that's whereby someone might be putting in their thinks they are in that space where they are going to be pointed at that, okay, this went wrong. Were you supposed to be doing that? I think in a way it's about just education, saying, well, basically we have to be transparent, because whatever we are preparing here is a public document. And so the auditors are actually asking so that when they endorse or they come across that they are the ones who saw our way of doing things, they know that everything was transparent. So that's all. So that's what I can share about this. There is quite a lot, actually, but yeah, this conflict of interest, I think one has to be able to be sensitive to it, and so that then they are able. And of course, as an accountant, then where I'm dealing with, I would see if there is anything that where the trustee is given some money that cannot be accounted for, or things like that. Yeah. So yeah, I think that's what I can share for the moment.
Yeah. Thank you, James. Yeah. Thanks for those comment there. Because again, like James has said there, we're talking about a charitable organization that's got board of trustees, and those board of trustees are different, from those that we call the operational or management. Yeah. So there you can see a system exists. Yeah. But even when that system exists there, where the board is different, from those who are charged with that day-to-day operational responsibility, still you are looking, to see if there is a potential management override. Yeah. Management override could be even within the organization operational. For example, you can have, the CEO who is not a trustee, so it does not involve in appointing you, yes, but it's involved, in the operational bit, but within the operation is so powerful that, it can override a lot of those decisions. You understand?
Mm-hmm.
Yeah?
Yeah.
Influencing because of his position. Yes? And so when we are auditing, we are saying, we're looking for these things as well. Yeah? Yeah. Is that CEO so powerful enough, that he can override, and some of the procedures that we got in place? Yeah. Okay. There's separation of function, between, the board and then the management, but within the management, then you got somebody who is that powerful. Yes. So you're looking for, yes, in Kevin's case, you see, Kevin paints a picture where it's one person. Yes. Okay. Now you can easily see that, one person, who appoints us, we're going to report against him. No, sorry. Yeah. You don't report, you don't bite the finger that fits you in a way. That's what it is. Yes. Okay. And well, I'm not saying this in a negative way or in a kind of a compromising way, but it's human being, it's human nature. Yes. And you cannot bite that. I cannot bite my own finger. Seriously. Yeah. No, it doesn't make sense. Yeah. And but look at this situation that James has just painted. The board of directors are different from management, but still, in that situation, there's potential conflict there. There's potential, management override. Yeah, because you got somebody, one individual that's so powerful. And that's the reason why, yes, in the background information, the organization chart, you need to understand the organization chart, the people who are involved in the business. Yes. Yeah. Number two, yes, in the organization chart, guys, background information. And this is what you're trying to source out. That same person that is up there as the board, is it the same as the CEO there? Or the board, yes, members, they are different from the operational. But it's not only that you're concerned about. You're concerned about also, yes, the control. Yeah, what are they responsible for and the kind of control that these people have? That's what you're trying to do when you talk about the organization chart. Yes, okay. It's beautiful, guys. I'm telling you, it's never ending. Your knowledge and your understanding. And when I talk about emotionally involved in those businesses, in everything you do, this is the kind of example I'm saying. So you might just draw the organization chart and say, okay, well, I've got it. I know who is who. But it's beyond that as well. Yes. Who is who and the power that they yield in an audit environment. Can they override? You understand? Do they have that power to override? Are they, have they got because again, when you're talking to some of these guys, like for example, the CEO, you're looking for that. Yeah. And when you're talking to the other guys, yes, you're looking for that as well. You're asking, well, hold on, what goes on here? Yes. And are you allowed to do your own stuff, without any interruption or, and on the duress or whatever it is? The auditor wants to know. Yeah, what does he want to know? Because he's trying to see whether there is a potential, management override here. Yeah. Okay. So important, guy. So you can have a one-to-one situation. The one person is the sole shareholder. Yeah, but also you can have organizations. Yeah, where you got the board. Yes, different. From the operations, but you still have issues within those. Yeah. Good questions and good points. All right, guys. Well, thank you very much. Yes.
Can I just add a very small one,
Yes,
especially
please.
on the operational level? That one is again to do with as human beings, there could be controls, but then in terms of operational, perhaps the person who has got a lot of influence says, I want to do this anymore. I mean, can't you do it? And if you are the accountant, you need to be careful about that. You say because it could be signing documents, it could be something to do with maybe even payments. But then this person is very, very busy, or maybe your CEO is very, very busy. Then they come around and say, oh no, can't you really do that? And because of the pressure of work or things like that, you need to be careful about that one, because later on when something is spotted, it will say, but why didn't you tell me? The same person who said it's okay, perhaps then you need to be able to say, put it in writing. Yeah, because as human beings, they may forget, and then they might have put you in that position where you are either signing a document and then you say it is okay, and it was a verbal thing. So need to be very careful about that as well.
Yeah. Yeah. Thank you very much, James, for your that contribution. So important, guys. Yeah, and I think we'll stop here for now because of time. Yeah, and then also want to just thank you, all of you guys, just to be here, with your contribution, and I'm sure that you guys will put things into practice. Don't just listen here. My take and my recommendation to you guys is to go and read. Yes, and whether you're a student, studying the ACCA, whether you pass your exams, whether you're looking to come into studying ACCA, it's so important for you to read. To study. Study is one of the things that is part of one of the 12 things that I do on a daily basis. I keep studying. Okay. And it's so important. We have to read. We have to read. Even though I'm talking about this here, I'm saying to you guys, you got to go and do your own reading. Yes. do the reading, get the understanding. Yeah. When you read, you understand, I'm telling you, it's going to open up, so many doors. Yeah. Okay. Thank you, guys. And I'll see you all next week. Yes, next Thursday. Thanks. Bye-bye now. Bye-bye.